and I want to welcome you to our webinar today on our tax strategies module. And so there's no time like the present to be looking at different ways to be more tax efficient when trying to curate a client plan. And with the tax strategies that are available in our tax dedicated tool, there are now a couple new visuals and a couple new ways you can be even more tax efficient in your planning approaches. So today we are going to be reviewing each of those different new tools that are available. We're going to be walking through the new popular strategy, the asset location strategy, and what that entails in a client plan. And we're also going to walk through our new dynamic Solve It button and how that can be leveraged in a client plan. And of course, with the tax strategies module, one of the very popular tools that has always been available is the Roth conversion strategies that are available to be leveraged there. So we're going to look at curating those and some of the new visuals available as well. Towards the end of this webinar, we are going to be reviewing the different resources that you do have available to you when leveraging RightCapital. One of those resources being that during this webinar, if you have any questions, please feel free to use that Q&A section to type out questions there. More than happy to answer any questions you might have. And so shifting gears into RightCapital, the client family that we're going to be working on is going to be the Adams family. And today we're going to be starting our conversation off with just addressing who these clients are, because understanding where they are today is going to have an impact to the strategies that we're looking to curate with our tax strategies module. So starting in profile blueprint with the Adams family, just to review what their current net worth looks like, they currently have a net worth of $2.1 million, including their primary home and a couple debts. But some of the main factors for today's conversation is going to be surrounding their investment portfolio. So they do have a good amount in their traditional 401ks or the tax deferred bucket, a good amount in taxable brokerage assets. Then we also have a Roth 401k available as well from Morticia. For this family, they are age 61, which means they're at a prime age for looking at things such as Roth conversions. And they do have 2 children as well, one who's still in college, but is on the precipice of ending their college years. Going over into their goals section, this is where we can see their life map of what their goals look like across their lifetime. Here we can see that they have their child still attending college. We have a vacation this year, and they're both retiring at age 67. Now, for the retirement monthly living expenses, they do have a goal of $10,000 a month. And then we have their long-term care costs kicking in at the end of life as well. Now, one thing I want to note, as we are going to be diving into it pretty briefly later on, in the annual retirement healthcare cost card, I just want to note we do have Medicare premiums turned on for this family. This is going to have an implication when we're looking at things like Roth conversions, as a lot of times if we're increasing things like our AGI with Roth conversions, that can have an impact to income-related monthly adjustment amounts on Medicare premiums or IRMA. And if we're looking to ensure that we have Medicare premiums turned on, this is the card that we'd want to target to do so. So it's going to be the annual retirement healthcare cost card. We'd want to make sure cost estimate, detailed estimate is selected, and we're going to see 4 fields populated here. One for pre-Medicare costs, if relevant for the client, if we have this cost starting prior to age 65, and then we'd see Medicare premiums part B and D be automatically calculated based off of AGI, and it is considering the 2-year look back there. And we also have a field to include any additional out-of-pocket costs post age 65 on top of Medicare premiums. But I just want to highlight that briefly as we are going to be touching on that subject later on. That's how we can make sure that we are including Medicare premiums in the client plan. Now, for their current income, savings, and expenses, here we can see we've got some nice income coming in from Morticia and Gomez. We are planning on filing for Social Security age 67 and 70 respectively. We have some nice saving habits as well, and also some nice spending habits on top of that, of course. Now to transition over to the main aspect of today's conversation, now that we understand who we're planning for, we're going to be targeting the tax module. So under tax, this is where we are focusing on that tax picture, but we're going to be focusing specifically on our tax strategies tool. Now with the tax strategies tool, there's a lot of fantastic visuals and capabilities found here, starting with the summary section. So under summary, this is a nice space to see a nice comparison visual of our proposed strategy that we're going to be curating in the action items below versus our reference strategy. But for the first strategy that we're going to be reviewing, in the action items, this is where we go to see what strategies are available and to start to curate our tax proposal. And this is completely customizable in terms of what strategies we're looking at. But today we're going to be looking at all available strategies, and I'll review how you can create a custom one that doesn't include certain ones depending upon what the client's circumstances are. So for action items, we have 4 different action items that you can manipulate. The first one is going to be an asset location strategy. Now for asset location strategy, this is our new strategy that is available. It's a very popular tactic when we're trying to look at different equity allocations, especially as we're looking across somebody's lifetime and we're trying to rebalance the portfolio in a different manner. So just to provide some context as to what that looks like, we're going to scroll a little bit further up and we're going to change what chart we're looking at to just assist in this visual conversation. So we're going to be using this drop down here and toggling to the asset location chart. With this asset location chart, this is going to be showing us what the current situation is for the equity versus fixed income split for their total portfolio. Now, the default for this is going to be pro rata, which means it's proportionally allocated for the equity conversation based off of what's happening for their current assets. Now, just to take it a step back, just to describe for those who are not familiar with the asset location strategy, I just want to define very briefly what that is. So with the asset location strategy, this grants you control over how a client's equities are allocated between the 3 tax buckets, which are taxable, tax deferred, and tax-free. Put differently, you can choose how the equity portion of the client's overall asset allocation is spread between these tax buckets with this strategy. These options will reallocate a client's equities to fill up each tax bucket in order based off of what we're going to select in a second before overflowing into the next bucket. And this is going to be dependent upon the current dollar value within each bucket. So just to provide a quick example with some just simple math, if we have a client that has, say, $300,000 portfolio with $100,000 in each tax bucket, and let's say that we indicate that we want to change our equity allocation to taxable, tax-free, and tax-deferred, which is available via this dropdown, we will then first shift as much equities as possible to the taxable bucket. In that example, if they have a balance in the taxable bucket of that 100,000, we roughly can then overflow that taxable bucket and then have that 50,000 remaining amount go into the tax-free bucket. So it's that idea that we're working with at whatever dollar amount we have based off of our split for equities versus fixed income, and we're going to be reallocating the equity conversation. So that's just a baseline example of what that looks like. We're going to be looking at this specific client example just to dive into it a little bit further. So for the summary, we can see with this current client, the Adams family, they have a split of 73% to 27% of equities versus fixed income. Now, just to take it a step back, we're going to go to the investment module because we're going to find a very helpful visual just to talk about what's happening with the tax allocation picture. So if you go to investment tax allocation, in general, especially when we're trying to define the tax exposed buckets, this is helpful just for the context of the current tax allocation. So we have 400,000 in the taxable bucket, 725,000 in the tax deferred assets, and 100,000 in tax free. So this is going to be just an important figure to keep in mind when we're trying to look at a specific client case. Now, what's helpful about these particular tools is you can click into each of those numbers or into the pie chart when you're looking to define a little bit further other examples of what a tax deferred asset is with a client versus tax free. So just to provide a little bit more context there, we're going to go back to tax strategies, back into summary and looking at the asset location chart. So now we have that a little bit more context about the dollar amount that is already established for the different tax exposed buckets. That is going to be what's used when we're defining that we want to change our equity allocation. So if we go into the action items, and if we want to change our equity allocation, we can then use this drop down to indicate what ordering we want to say that we want to fill up with the equities where available. So if we wanted to do taxable, tax-free, tax-deferred, we can select that option. And we're going to leave the rest the same just to isolate the impacts of this particular conversation. When we make that adjustment, we're then going to see that we're going to have the conversation of 100% equities and taxable bucket. Then since we indicated tax-free, we have just 100,000 in tax-free. We're now then going to see 100% tax-free, and the remaining overflow goes to the tax-deferred, as that's going to have that most amount of money currently in that particular bucket. So this is how we're going to be able to have that visual conversation just about the discussion about changing equity allocation. When we make that modification, we're also going to see how our proposed strategy can result in more tax-adjusted ending assets. How is it impacting taxes? How much less or more would we be paying with this strategy? And how much less or more would we be having from tax-deferred withdrawals? And just to reference for a lot of these visuals, our reference strategy is going to be whatever we have indicated on the right-hand side. So right now I have it reflecting just the current path strategy as I've made no adjustments. And so as we make those sorts of adjustments, we're going to be diving into a lot of the different pieces that are available in this module. There's going to be a lot of details that we're going to dive into in the details tab, but we're going to be focusing on just some of the other strategies available as well. Now, just to go back to the summary of tax strategy visual, we'll also see just a nice visual graph here that depicts what we see on that right-hand side, just for reference as well. Now, under the calibration tab, this is where we can specifically focus on conversations surrounding Roth conversions and some of the other factors as well, of course. So starting with the ordinary income tax bracket visual, for those of you that are already familiar with this, this is typically where we host the conversation surrounding what is happening with our adjusted taxable income over time. So this is where we can also see just that threshold for each of the different tax brackets. And I want to note right now, for my assumptions, I am assuming 2026 TCJA sunsetting. So that's why we're going to see two different tax brackets listed for some of these different tax brackets. So when we're referring to 22% and 25% tax bracket, that's assuming in 2026 we go back to that certain tax law. Now you can customize your own tax law in your assumption section, but I just want to reference that is why we're going to see two different tax brackets here. Now, for the conversation that happens surrounding what is happening for each of the tax brackets, this is a great space to just see where do we potentially have room for things like Roth conversions, which is going to drive up the figures that we're seeing here. Now, this is going to tie in directly to one of our very popular strategies down below in the action items. So under the action items, this is where we'll be able to find our Roth conversion strategy. Now, for Roth conversion strategies, there's a couple different ways that we can then indicate how we want to model Roth conversions. So we have Medicare premium tax bracket if we're looking to not trigger IRMA, which is one of the strategies available for income related monthly adjustment amounts with Medicare premiums. There's also capital gains tax brackets available, but today we're focusing on ordinary income tax bracket. So we're going to make that switch and indicate via the slider what tax bracket are we looking to then fill up to. So let's say we see that there's a lot of room to fill up to that 24, 28%. We can use that slider to indicate so. Once we hit the refresh button, we're then going to see how that's going to impact the conversation surrounding the ordinary income tax bracket chart over time. And then that's automatically going to be calculating Roth conversions and by filling up the tax brackets where applicable throughout each of their time frames. So that's going to be just one of the different strategies available. Now, there are a couple different graphs available for conversations as well from here. So if we click on this drop down, there is also a chart that highlights key tax components. Now, this covers the tax conversation in regards to what is contributing to our tax picture. So it's not surprising that while we're still working, a majority of our tax conversation is going to be happening surrounding salary, of course. And then we see a nice break later on. We also have a visual chart that will highlight capital gains tax brackets and the Medicare premium tax bracket for conversations as well. And these are, of course, going to be explicitly relevant with the different Roth conversion strategies available. Another strategy that's available that's going to be focusing on the tax efficient strategies is taking a different approach when it comes to withdrawal strategies. So that's going to be our second most strategy available in the action items. So under withdrawal sequence, this is where you can go to just either test out which ones you want to apply or evaluate different types of tax efficient withdrawal strategies. Now, withdrawal strategies are going to be what order we are pulling from assets in the event where we don't have enough income inflows to cover our outflows. We know that we're going to be pulling from our assets to fund those. So this is going to be the account ordering that we're pulling from to fund those outflows. So right now for my current strategy, that's taxable, then tax deferred, and then tax-free if all else is depleted. So if we're looking to also compare against different tax efficient withdrawal strategies, you can also use the drop down to toggle between different ones. But for right now, we're going to leave these the same to really isolate the two different strategies we have currently selected. Now, once we make those selections and we scroll a little bit further up, we can go into the comparisons chart where we're going to find a lot of very helpful comparisons graphs, starting with the invested assets comparison. Now, this is going to be comparing our invested assets between that proposed strategy that we have indicated in the action items versus our reference strategy that we have indicated on the right-hand side, and how much more we're going to have in ending assets, and also a line that's going to differentiate tax-adjusted ending assets. Now, if we use this drop down, we can also look at federal taxes paid, which is going to be a very big question, of course, when we're looking at tax strategies. We're going to want to see how is that impacting our tax picture. So we can see that implication in terms of how much we're paying in taxes at the federal level each year, but also how much less in total that we're paying in taxes with our proposed strategy. We also have a chart that will show us the difference of RMDs and how much less we're going to have in RMDs. And just looking at this chart, it's not surprising that with our current, or I should say the proposed strategy, that we are negating RMDs entirely just because we're fully converting that tax deferred assets. And then we'll also have the graph of tax adjusted ending wealth. And this will display how much we're going to have at the end of plan in terms of tax-free dollars versus that percentage of tax-free. If we didn't do the Roth conversions and didn't change our equity allocation, we'd have 16% tax-free, 45% taxable, and then 38% tax deferred. And we're also going to see a difference here in ending portfolio value as well. We can also view the visual illustration of the difference of withdrawals from accounts and the ordering in which we're pulling from accounts as well. And we'll also see the difference of account balances by tax exposed bucket over time. Now, one of the final toggles that you're going to be able to leverage in the action items that I want to touch on is going to be the estimated terminal tax rate. Now, what we indicate in the estimated terminal tax rate is only going to be applied to the visuals in the tax strategies tool, as what we use the slider for is to indicate the percentage of tax rate that we want to assume that the heirs are going to be subject to when inheriting these assets. So particularly if we're having a conversation with the client and their main concern is ensuring that the surviving heirs are not going to be subject to a very heavy tax burden, which is oftentimes why we would apply some of these strategies to then have mostly tax-free dollars to be inherited. That's where that estimated terminal tax rate really comes into play. So that's going to have an impact to some of the visuals we'd see here. So if we want to assume that their children are going to grow up to be maybe business owners, they're going to be subject to a pretty heavy terminal tax rate. We can use that slider to just bump that up a little bit, hit the refresh button, And we're going to see that impact some of the differences from the tax adjusted ending wealth chart. So when we make changes there, that's going to impact those assets that would be subject to terminal tax rate. So just to show what that looks like a little bit, we'll hit the refresh button and show how that will impact that visual, which is going to be the right-hand side, since the left-hand side were all tax-free. But just to note that that's what that particular action item is targeting. Now to go into the details tab, this is where we can see a lot of very insightful information surrounding the details and the logistics of the Roth conversions, for example, and a couple other things. So to start with, under details is the withdrawals and conversion breakdown. So here we can see the specific dollar amount that we are converting per year based off of the strategy we have curated. And we can see when that's happening and for how much. And we can also see what's happening in terms of withdrawals from accounts and account balances by tax exposed bucket. Now, let's say that we're seeing this visual and we're saying to ourselves, we know that the client is not comfortable maybe doing conversions after they retire. If that's the case, then we can indicate that we want to have a hard stop to the conversion calculations. So if we go back to calibrations and into the action items, we can click on the edit button. And that's going to open up that drawer that also allows for you to have a further customized action item list. I see a couple of you were pointing out that you don't see equity allocation available in the action items. This particular space is going to be why. So if we click on that edit button, this is where we go to toggle what strategies we want to include as available to be manipulated in the action items. So we just want to make sure that those are toggled on. They're going to be highlighted in blue if they are toggled on. But for what we're looking to specifically model right now, under Roth conversion strategy, we can check off these two options that are available to indicate that we want either a hard stop to the calculation for conversions, or if we wanted to indicate conversions should not be calculated prior to a certain period. Now, just to check each of those off so that we have the option, once we hit that save button, we're now going to see those two available options populate in the action items for us to be able to indicate some additional parameters. So if we do have a hard stop for conversions, we can then use this dropdown to either toggle to a life event, maybe their retirement, a calendar year, after a number of years, or an age. But just for this example, for the one-time discussion, just to show what it looks like if we indicated that we want the conversions to end at Morticia's retirement, which might not always be the path that we're looking at, we can indicate that specific parameter here and then see how, even when we take that approach, how it's going to impact their plan and impact those visuals. Now, if we go back to details, we're then going to see that once they retire, there's no conversions being calculated after that point. But that's how you can incorporate that idea of we want a hard stop for Roth conversions in that calculation, as what we're indicating there is going to be that intelligent tool that fills up the tax bracket when we have the tax deferred assets available and when there's room in the tax brackets that they're in. Another helpful conversation that can be had under details is going to be the tax details breakdown. Now, this is going to be showing us what the adjusted taxable income looks like over time and where they're falling into each of the tax brackets. We also have the conversation surrounding Medicare premiums that can be pretty popular when talking about tax efficient strategies and Roth conversions specifically. Under Medicare premiums, this is where we can see what the MAGI is, the threshold for Medicare premiums, and also how much the Medicare premiums are for client and co-client if we have those turned on in the annual retirement healthcare cost card, which can be found under goals under profile. And one of the final visuals available under asset location summary is going to dive into what is happening with the asset location path that we indicated, or the equity allocation strategy. So this is where we can see that dynamic kind of approach that's happening based off of what we indicated for our strategy, where we're going to be prioritizing equity into the taxable bucket, then tax-free, and then overflowing into tax-deferred. So we can see here that we're going to be maintaining the overall portfolio equity of 73%. That is not changing. What is changing is our prioritization of putting equity dollars into those specified buckets. So we're starting with taxable account equity. We can click into that to see it's 100% equity because that's what we have indicated, and there's the money available for that strategy. For tax-free, we can click into that to then see what's happening with the tax-free bucket. Now we will also see an excluded column for tax-free and tax-deferred. This is going to show us when we hover over it, what types of accounts are going to be excluded from these strategies. As we know, there are unique vehicles available for investments, such as inherited IRAs, annuities, and 529s. Those are going to be unique products that are not going to be included in the equity allocation conversation. So we'd see that particular number excluded if that's the case, and it's just going to notate that for our ease when hovering over each of these breakdowns. Now for tax deferred, this is the one where we have the most money in, it's $725,000 if we recall, and that's the last one we're prioritizing in this strategy. So it's not surprising that this is going to have the least tax deferred equity allocation. And we'll see that this is a dynamic calculation over time. It is going to be reflecting what's happening in terms of the dollar amounts that are going to be available per bucket over time. So in this particular conversation, we are converting everything, so we're not going to see that there's going to be money available there, which is why it's dropping a 0 at the end. I want to note, because I also see that this is a question when we're going to dive into it towards the end, but something you'll see available under details in particular is the option to download each of these charts into an Excel spreadsheet. So anytime we see this blue download icon, this is an indicator you can download each of these pieces of information into that Excel spreadsheet. Now, later on, I'm going to be diving into what PDF report curation looks like, because you can also customize the tax strategies in PDF reports as well. Now, finally, is going to be our strategies tool. This is going to be where we can calculate the top strategies for this client plan. Before we hit the solve button, I want to note what can be captured here. So in the action items, whatever strategies we have indicated to be included in the action items is going to be included in our solve for top strategies. So right now we have the 3 main strategy options, which are asset location, withdrawal strategy, and Roth conversion strategy as well. So if you did say take away withdrawal strategy, then we're only going to calculate for asset location and Roth conversion strategy. So it is customizable in that regard as well. And then when we're ready, we can hit the solve for top strategies button, and that's going to be a dynamic calculation that's going to be happening based on all the plan parameters that we have in their path and what we have indicated in the action items as well. So as we can see here, we're going to see a nice graph that's going to break down and outline the top 5 strategies available for the client path based off of what we have available in the action items. So we're going to see here the rankings based on tax adjusted ending asset value. We can see with the top strategy, we'd have 13 million, just a little bit over. Same thing for the second strategy, just a little bit over 13 million. And then it slowly goes down to the last strategy, which is below 13 million with a $12 million tax adjusted ending asset value. And if we follow these across the chart, we're going to see which strategy combinations would then cause our tax adjusted ending wealth to be 13 million, just a little over, which is the asset location strategy of tax-free, taxable, tax-deferred, withdrawal strategy of taxable, tax-free, tax-deferred, and then the Roth conversion strategy of 28% to the ordinary income tax bracket. Now, it doesn't mean that these are not going to be viable options. This is just showing us the different paths and the different combinations that are available based off the action items we have indicated. So this is doing hundreds of calculations and analyzing all the different applications of the different strategies available and determining which are going to be the top 5 based on tax adjusted ending asset value. With that in mind, it is going to be considering all aspects of the tax picture. I want to note for my clients, I have them listed as married filing jointly. If we have the situation where we indicated that the clients are not married and they're filing separately, or if they're married filing separately, you're going to see a couple different strategies listed here. But for my conversation, this is going to be focusing on married filing jointly for a client and co-client. And so if we wanted to capture these different strategies, we can then scroll down to the action items or asset location strategy. We can switch over to tax-free, taxable, tax-deferred. For withdrawal strategy, that was taxable, tax-free, tax-deferred, and then we can use for the 24, 28%, which is what we already have indicated. We can then hit refresh, and that's now baked into our conversation surrounding our proposed tax strategy. And then we can always revisit some of these helpful graphs that are going to illustrate the difference of our proposed strategy versus the reference strategy. Now, if we are looking to apply what we just curated into the proposed plan and show the implications to things like the probability of success, which is a different calculation, that is when we navigate to the retirement module. Under the retirement module, we're going to be greeted with the analysis section. This is going to be looking at one of those gauges of financial well-being, which is going to be the probability of success. Probability of success is going to be looking at the Monte Carlo simulations, which are the 1,000 trials of market volatility, and it's a percentage of those trials that make it to the end of plan without running out of money. So if we wanted to show the impacts to things like the probability of success and incorporate our tax strategy into this proposed plan, we can do so by coming into retirement analysis, going down into the action items. And then on the right-hand side is where we're going to find our available strategies. One of those is going to be our tax strategy. So we're going to change the current strategy here to tax proposal from that drop-down. Once we hit refresh, we're then going to see how that's going to impact that probability of success, which is from the Monte Carlo simulation calculation specifically. And so we can see here it did increase their probability of success, which is great. We also see the green bar chart, just to note, is looking at the median assets or the median trials ending asset value. So that's also risen for those ranges of trials. So that's also a good sign as well. Now, some other key visuals for comparisons that are available here as well are going to be found under the aptly named comparisons tab. This is going to be very similar to what you reviewed in the tax strategies module, but this is also a space to be able to show a comparison between your entire proposed plan here versus the current plan. This is going to be, because I see this is a question, a little bit more beneficial to cover if we have an entirely different proposed plan versus current plan. So for example, if I had indicated in my proposed plan that maybe we're retiring earlier, we're spending more in retirement, and I have a lot of differences between my current plan, this is where we can see that overarching proposed plan versus current path. Whereas when we're looking in the tax strategies tool, that's isolating your strategy for tax efficient planning. So it's only going to be focusing on whichever plan you have selected and comparing it against your reference strategy and your proposed action items. But here under comparisons, this is where we can see how much more or less we're going to have invested assets, how much more or less we're going to have in net worth as well. And then for total taxes, and then assets at retirement. So this is also going to be a space to have that conversation as well. Now, I also want to highlight how we can create customized PDF reports before we dive into some Q&A. So if we go to the gear icon and in the report section, this is where we go to curate PDF reports or PDF deliverables. So gear icon report, this is where we go to check off what modules or planning tools we want to have included in the conversation in the PDF deliverable. So what we reviewed today was tax allocation, analysis very briefly, and tax strategies. For analysis and tax strategies, but tax strategies in particular, you're going to notice that these are underlined. Anytime we see something underlined in RightCapital, that's an indicator that we can click into it for more functionality. Now for PDF report selections and specific for tax strategies, this allows for you to be very intentional in regards to what visuals and pieces of information you want to have incorporated in this PDF report. So you can have everything selected. When you check off the box, everything is selected. But if you wanted to maybe not include certain pieces, maybe the key tax components, capital gains tax bracket, are not relevant to that conversation, you can deselect those and also make different selections down below as well. You also can reorder the flow of the presentation for tax strategies by dragging and dropping each of the tools as well. So if you prefer to cover calibration first, then to comparisons, and then summary, you can make those selections at the sub-tab level and even at the under tab level as well. So that's how you can make a further customization to PDF reports. That's going to be a newer functionality available.